Typically, somebody is selling their current residence because they want to move or downsize somewhere else. And so instead of having to pay all cash and use up all of their reserves, they can put 50% down on the next house and finance the remaining 50% with a reverse mortgage. And guess what? In the end, they do not have to make mortgage payments, so cash flow is intact. And that 50% they haven't had to cover is now money they can use for retirement.
Welcome to Absolute Trust Talk with your host, Kirsten Howe. Absolute Trust Talk brings you tips, tools, advice, and interviews to help you build a reliable knowledge base on estate planning, business, and finance to start preparing for your future today.
Hello, and welcome to Absolute Trust Talk. This is another Facebook Live version of our podcast here at Absolute Trust Council, and I'm Kirsten Howe, your host. Today, my guest is Russell Doy, a specialist in reverse mortgages with Mutual of Omaha Mortgage. I'm going to introduce him officially in just a few minutes, but I just want to let you know what we'll be talking about so you can get excited about it as I am. A reverse mortgage is a financial planning tool that got a little bit of a bad reputation a number of years ago, and perhaps deservedly so. But the industry and the products themselves have changed significantly. And we are seeing in our practice more and more of our clients using this tool and taking advantage of it in their financial planning and finding that it really can be a great solution to a lot of things that people are dealing with. So we're going to be talking about reverse mortgages, the improvements that have been made, how it works, how the sausage gets made, and some of the reasons that people do reverse mortgages. And some of them might be surprising to you. You're not what you would have expected. So that's what we're going to cover today. Now, as those of you who are regular listeners know, we got to do a little housekeeping before we get started. So we always take questions at the end. So if you're watching live, go ahead and type in a question into the comment area there on Facebook. And at the end of our conversation, I will ask those questions and give Russell an opportunity to answer them. So you can type the question in at any time. We'll answer them at the end. And if you're not watching live, sorry, no questions for you. Better luck next time. Okay, so now my guest, Russell Doy, has over 30 years in the lending industry. That's interesting, over 30. That's what I say too. Yeah, I've been a lawyer for over 30 years because at some point you got to stop telling the real number, right? Anyway, he has over 30 years of experience in the lending industry, covering the whole spectrum of lending from private money loans to commercial conventional loans, and reverse mortgage loans is now his focus. And he has been focused on FHA and reverse mortgages for the last 8 years. And as I said, he works for Mutual of Omaha Mortgage, which is one of the leaders in the reverse mortgage industry. And as we will discuss, for those of you who don't already know this, reverse mortgages are designed for seniors primarily, and Russell's passion for helping seniors actually carries over into his off time. For the last 10 years, he has volunteered at a senior center here in the East Bay that provides hot lunches to seniors. It does fitness classes. It has case management services, cultural enrichment, and he has served on their board of directors for 6 years. So his commitment to seniors, helping seniors, is pretty serious. He also organizes work parties to assist seniors around their home with, things like decluttering, yard work, minor home repairs. So you see that he really is a good guy and he cares about our seniors. Russell is also a Bay Area native, born in Berkeley, raised in El Cerrito. He's an alum of Cal State East Bay. He's a local guy. And we are just so very fortunate to have a few minutes of his time here today. Welcome, Russell. Thank you.
Well, thank you very much, Kirsten. It's a pleasure being here, and it sounded like a long bio, so now you guys know all about my life. So I appreciate that.
Well, I'm sure there are a few things that I left out, but they can find out on their own. Let's just get started then with the most basic of basic questions, because that's how I like to go. What is a reverse mortgage?
So reverse mortgage, it's a type of mortgage that allows senior homeowners to convert a portion of their home equity into tax-free usable cash, and it requires no monthly mortgage payments. The loan balance is paid back when the borrower either moves or passes away or when the home is sold. And the requirements to keep this loan in place are the home has to be a primary residence. It has to be owner occupied and maintained, and the property taxes, insurance, and homeowners dues, if any, must be paid on time. And the borrower of a reverse mortgage does not ever lose or share ownership to their homes with any particular lender. Really, a reverse mortgage is geared towards homeowners who want to continue to live in their homes long term.
Okay, so it basically, I think if I'm understanding you correctly, it allows people to use the home equity that they have built up over the years by virtue of just sometimes just owning a home for a long time, and it goes up in value to turn some of that equity into actual dollars that they can spend.
That's correct.
Okay, so what are some of the reasons that you see people wanting to do this?
Several reasons, or everybody is different. Now you can use the money from a reverse for any purpose, but I have a few clients who, for instance, wanted to pay off their current conventional mortgage, and because they were able to do that, immediately improved their cash flow because they no longer have to make monthly mortgage payments.
Okay, so the mortgage payment just goes away if you pay it off.
Because a reverse mortgage does not have a required monthly mortgage payments, it will eliminate the need to have to come up with that every single month.
Got it. Okay. I can imagine that is a desirable thing, especially if you're, when we retire now, we don't have the ability to go out and earn more money.
Right.
We might be living on Social Security and our investments, so things are more fixed. So it's kind of nice to get rid of that monthly check that you've been writing to the lender. Yeah,
that's right. So that's one example. Other examples are some maybe need to have some in-home care, and they may not have the means to be able to pay for it. So having this extra resource allows them to go ahead and pay what is very, very expensive. I think the average cost is sometimes between $27 to $40 an hour, depending on the type of care they need. And that can eat very quickly into somebody's life savings.
Yeah.
So having this extra resource really helps cover and allows them to pay for that in-home care.
Sure. Yeah. And, we see this all the time. Clients really want to stay in their homes.
Yes.
Even if they need care, they need help, they would much rather be able to pay for that care to come to them rather than move into some kind of a assisted living situation. Most of my clients, they want to live in their home to the end. So this is a nice tool to help them do that. Okay.
Yeah. Most of my clients, I ask them the same thing, and the preference is to continue to remain in their home long term.
Yeah, which is understandable. I mean, that's what I would like. Yeah, for sure.
Myself as well.
Yeah, my house. Yeah. I don't like climbing up all those stairs to get to my house. I'll tell you that.
Right. Well, that actually brings up another thing. If somebody wants to stay in their home and they do have stairs, they may need to have funds to remodel that home.
Oh, yeah.
Maybe they need these stair lifts or chair lifts to use for that sort of situation, or maybe they want to have grab bars so that they can kind of stabilize themselves, or any walk-in tubs or things that will really help them stay in their home long term. And so that costs money, obviously. So
Right.
A reverse mortgage helps pay for those kinds of things. Again, you can use the money to use it for any purpose that you want, really.
Yeah. It's your money. You can use it however you want.
Yeah.
And a lot of people, I know a lot of my clients, they do use it for various reasons that allow them to stay in their homes.
Right.
That's a really nice thing.
One thing that most people don't realize is that you can actually use a reverse mortgage to purchase a home too.
Yeah. In the beginning, when I said there are some reasons that might surprise you, that's one of them.
Yeah.
I think that's fascinating.
Yeah.
So tell us a little bit about that.
Sure. So typically somebody is selling their current residence because they want to move or downsize somewhere else. And so instead of having to pay all cash and use up all of their reserves, they can put 50% down on the next house and finance the remaining 50% with a reverse mortgage. And guess what? In the end, they do not have to make mortgage payments, so cash flow is intact. And that 50% they haven't had to cover is now money they can use for retirement.
Right. That's cool. Yeah, I like that. So you can downsize and get rid of your mortgage if you had one and not put any more cash into a house.
That's right.
You already have. Yeah.
That's right.
Nice. That's
so. The biggest thing about why they want a reverse mortgage is that there's either concerns about being able to pay for their everyday expenses. Maybe they're anticipating an increase in expenses in the future. And so it really provides, it could be even a backup liquid asset to cover and to give people peace of mind knowing that they're going to have enough funds in retirement. So It's a really nice extra resource to have.
What exactly are the qualification requirements for a reverse mortgage?
Pretty simple. It has to be a primary residence, owner occupied, and you have to be at least 62 years of age for the FHA version reverse mortgage. Now, there is a proprietary style of reverse mortgage called a jumbo loan, and the youngest age to qualify for that is 60 years old.
Okay.
Yeah. And if there's a husband and wife, then just one of those borrowers has to be at least 60 or 62, depending on the program.
So one could be 62 and one could be 40?
Yes.
Oh,
yes.
That's a good deal.
Right. That's right. That's right.
You can get a 40-year-old to marry you.
That's right. You said it. I didn't.
I know. That was bad.
Yeah. We run a credit report, so there are some minimal credit requirements. There are also some minimal income requirements. The bottom line is it's much easier to qualify for a reverse mortgage than it is for a conventional loan, which I used to do for 20-something years.
The financial underwriting is a lot cleaner, simpler. I guess because they aren't expecting you to make mortgage payments. So
right.
They don't really need to know, how much are you making at your job. You don't have to have a job. You just, right. That makes sense.
I would say 95% of my clients are not working, and really they only have Social Security income coming in. Most don't have pensions anymore. And so even with just Social Security, typically you could still qualify for a reverse mortgage.
Yeah. The income threshold is not very high.
That's right.
Yeah.
That's right.
I get that because, again, they don't expect you to make a mortgage payment.
Yeah.
Okay. So
they do, sorry to interrupt, but they do require that you have the ability to pay your property taxes, insurance, and homeowners dues, if any, long term. So that's really what they're looking for, is the borrower's capacity to be able to handle paying taxes, insurance, and homeowners dues long term. That's really what they're looking for.
Right. Okay. Now, I think in the past, there have been, or currently probably a lot of misconceptions about what reverse mortgage is and what it isn't. And one of them being the lender is going to own my house if I sign this document. And I don't want that. Can you talk about that?
Yeah, that seems to be one of the biggest concerns that comes up and misconceptions, really. The lender does not own title to the home. The lender doesn't share equity in the home, and the lender doesn't get the home if the borrower passes away necessarily. Title just remains in the name of the borrower or borrowers. And if it's in a trust, by the way, we keep the title in the trust. We don't have to take it out. And so they don't have to worry about losing that benefit. And the borrower can sell or refinance at any time. Really what happens in the end is that the lender just receives the amount of money that was been borrowed plus the accrued interest at that time. So whatever the loan balance is gets paid off, and the rest of it the profit goes to the borrower or the
family,
or the estate.
Right. So it's not unlike a conventional mortgage. When the property gets sold, the mortgage gets paid off. It's just the same thing. Yeah.
It's exactly the thing.
The bank never owns it. They just are standing there waiting to be paid.
That's right.
Yeah. Same.
And there's no prepayment penalty. So it's just simply the bank or lender or loan servicing company just receives the amount owed at that time.
Got it. Okay. Yep. Now, can you talk, Russell, just a little bit about the different ways that people can take their reverse mortgage money?
Sure. So the most popular way is a line of credit because there's a lot more flexibility with that. So what's nice is that with a line of credit, the interest only accrues on what has been drawn out. So if you have a line of credit of $300,000, for instance, and you only draw out $10,000, the interest just accrues on that $10,000, not the whole amount.
So it's very flexible.
It's very flexible. It's almost like a big credit card. You know how with the big credit card, a credit card, you can draw out money, but you can pay back if you want to. In this case, you don't have to pay it back.
You don't have to pay it back. Right.
Yeah. So that's the big difference between the two.
Yeah. You don't even have to pay the minimum monthly thing that the credit card company wants. Yeah. Nothing.
Right. Now, there is a huge benefit that's tied into a reverse line of credit that you don't have with a conventional line of credit or a bank line of credit, in that any unused portion of that line of credit limit will grow by the going interest rate plus mortgage insurance rate, which happens to be 0.5% right now. So if you take a line of credit out now, then maybe in 10 years, the line of credit limit now has grown significantly, maybe even doubled, depending on what the interest rates do.
Oh, okay. So your line of credit, in other words, the amount of money that's available to you, increases over time. You don't have to go refinance it to get more money out. Yeah,
that's right.
It's a feature of that tool.
It's built in and it's guaranteed. FHA guarantees that it will always increase. It will never decrease.
Never decrease. Okay.
Yeah. In fact, the line of credit itself can never be reduced, frozen, or canceled, unlike maybe a bank line of credit. So even if real estate were to take a dive, the line of credit will stay intact, including the growth that's built into it.
Yeah. The risk of that is on the lender / the insurer.
That's right. That's right. Exactly right.
Okay. And
other ways to take it is monthly payments, or a lump sum, or a combination of all of that, depending on the needs of the borrower.
Okay. So that's kind of when you're meeting with the borrower and trying to set this up for them, you work with them to figure out which way is going to work best.
That's right.
Is it going to be a line of credit? Should we do a lump sum? What's best for the borrower? And you can structure it however works best for them.
Yeah. The conversations I have oftentimes takes quite a bit of time because everybody's needs are different. Right. And so, yes, we have to structure it in the way that best fits those needs.
Right. Yeah. Yep. Okay. Before I turn it over to questions, and I should do that in a minute.
Sure.
Let me just ask you, generally, I'm sure you must have some kind of rule of thumb, or maybe that there's an absolute answer. How much is available to borrowers?
It's a good question. So HUD has a formula that all lenders use. And in the formula, the amount of the maximum loan is determined by one's age. And the older you are, the more they lend. Also, current interest rate, the lower the interest rate, the more they lend. And how much home is worth. So the greater the value, obviously, then the more they'll lend. FHA roughly loan amount right now is typically in the $300,000 to $450,000 range, $450,000 range. The proprietary or the jumbo type loans can go up to 50% of the total value, as high as $4 million.
Oh, wow.
Yeah, it's quite extensive. I did a loan for somebody in the Bay Area. Their house was worth $2.3 million, and we were able to lend over $1 million. We took that money and paid off a balance of $600,000, where he was paying out every month $3,000 a month. And we gave him an additional $400,000 to put towards his retirement.
Whatever he needs. Yeah. Wow.
So that worked out great.
Okay. That's fascinating. But what's the opposite of jumbo? Just the FHA?
FHA, home equity conversion.
I want to use the right terminology. Okay. So on the FHA, you were talking about $1, usually at $350, maybe $400. Is there a percentage of the total equity that they won't go above?
Well, there are limits. And so right now they just raised the limits to $822,375. But that's kind of like, I would look at that as the value of the home, the max value of the home. So they start with that, and then they take consideration those other elements, the age, the current interest rate, and how much equity is left in the home. Okay. And so then that formula will kind of spit out the maximum loan. And that maximum loan for FHA typically, like I said, is between $300,000 to $450,000.
Okay. Yeah. Got it. Okay, well, so that's good to know. All right, now we do have some people asking questions. So one of the questions I have, does credit score affect eligibility for a reverse mortgage? I think you talked about that a little bit, but maybe you can give us a little more on that.
Yeah, credit score is not used as one of the qualifying factors, but a credit report will be run. And if there are any credit lates or derogatory accounts, then we just have to have an explanation letter. And that usually is enough to satisfy the lender.
Okay, so they're not looking for a 750. That it's not so much that, it's more
it's
like
not predicated on score at all.
Yeah. Do you have problems on there? And let's
That's right.
find out what they are. Okay.
That's right.
Okay. And I think kind of related to that question is the question of, if you have a reverse mortgage, who is paying for the taxes, insurance, those kinds of things? The borrower is still, right. So you still have to, you're not completely free housing.
Right. So you still are responsible for paying property taxes, your homeowner's insurance, and if it's a condo or PUD, then your homeowner's dues as well.
Yeah.
Yeah.
Okay. Well, and here's another question that's maybe related to that, and it might be a little exciting of a question. I don't know. I'm guessing as a lender, generally, you want the borrower to maintain the property. You don't want them to let it rot and, a hole in the roof and everything's ruined.
Sure.
Is there any ongoing requirements with respect to that?
Yeah, so the lender does require that you maintain the home. And so if, for instance, the roof goes leaky, they want to make sure you patch it up. If there's any sort of health and safety issues going on, they just want to make sure that the borrower is safe from any of those kinds of hazards. Do they send somebody out to inspect? They can, but I haven't found that any of my lenders have done that so far. So maybe in the future they will, but for up to now, they haven't really sent anybody out to knock on the door to check. I mean, the home itself is the collateral for the loan, just like on a conventional loan.
Right.
The home is the collateral for the reverse mortgage. You sign a deed of trust, you sign a note. It's the same in terms of, those kinds of things.
Yeah, so you can imagine why the lender
That's right.
They care about the state of it. But it sounds like they haven't experienced too many bad situations such that they feel they have to go out and inspect it every time. So
that's right.
Okay. So I have one more question in here, which is, can you talk about the costs and fees involved in a reverse mortgage? And also specifically, are there additional fees or costs after the deal is completed and in place?
Okay. The cost once the deal is in place is the interest that's accruing and what they call mortgage insurance as well. So mortgage insurance is really the insurance that these lenders need to cover any shortfall. For instance, if a home, and we didn't talk about this, if a home actually went upside down or the loan went upside down, meaning it's greater than the value of the home.
Right.
Number one, the borrower can continue to live in the home indefinitely, but the borrower is also not liable for any shortfall. And so who pays for that shortfall? It comes from this pot that's created called mortgage insurance. So mortgage insurance is important to the lender, but also important to the borrower in order to cover that sort of shortfall. So that's a cost that's put in place that's ongoing, and there's some upfront mortgage insurance that's required in the beginning. The rest of the costs are very typical to any other typical mortgage, whether it's FHA or conventional.
Yeah, all the stuff that you see on that settlement statement when you buy a house.
That's right.
But let me clarify something. The ongoing costs, like the insurance, that's got to get paid every year, the mortgage insurance, and the interest that you're not actually paying that out of pocket. It's just part of what you are ultimately borrowing.
I'm glad you clarified that. Because you're not making mortgage payments, you're not accruing that, or you're not paying that interest, you're accruing it. So the way it gets paid off is when you ultimately sell the house.
Right.
Or if the family sells the house. Right. At that point, then they get all of their interest plus mortgage insurance, plus the amount that's been borrowed back.
Okay. So once you sign yourself up for the reverse mortgage, these ongoing costs that kind of keep the thing maintained and healthy, you don't see it. You're not writing a check for it. It's just part of what's happening.
That's right. You see it on your monthly statement. So every month you're going to see what your balance is. every month they'll also itemize how much is coming from interest, how much is coming from mortgage insurance, and then you'll see the total amount added together.
Okay.
Yeah.
And it's just a statement. It's not an invoice.
That's right.
That's what I get from Kaiser. This is not an invoice.
That's right. That's right.
Okay.
We have enough bills to pay already.
Yeah, I know. Okay. Thank you for answering those questions, Russell. And I want to let everybody know before I let you go, Russell, we didn't get to ask nearly as many questions as I would have liked because there's a lot to this, and it is complicated. Russell is an expert, and he could sit here all day and answer questions, I'm sure. But I want to say is that he's two things. He has made available to us this frequently asked questions document that he has available. It's going to be available on our website because that's where the podcast is going to be. So if you want to, there are many more questions on here than I was able to ask him. So if you want a little bit more information, you can do that. Also, you can go to Russell's website, which is russelldoy.com. You can email him, rdoy@mutualmortgage.com, or you can call him 510-305-9476. He is happy to talk to anybody. He's very generous with his time. He'll talk to you as long as you need to understand, is this something that might work for me? And he can even tell you exactly how much you would likely be able to qualify for just by talking to him. He's just happy to educate. And if educating you helps you, then he's very happy to do that. So don't hesitate to take him up on all of that. And all of that information that I just spit out at you will be on our website. So you can find it. Don't worry about it. And I know Russell also does seminars and workshops on this subject. So if you want to find out when he's going to be doing a seminar, just go ahead and contact him directly. And I just want to thank you, Russell. This has been very, very informative, and I really appreciate your time and your valuable expertise.
Well, I want to thank you as well, Kirsten, and it's been a pleasure. And I love educating people about this program because there's a lot still, even today, a lot of misconceptions about it. But I think once they take the time to educate themselves about the reverse mortgage today, they'll realize there's a lot of safeguards built in, and it's really transformed over the last 10 years, especially. And so it's worth taking that time. And I'm willing to give you as much time as possible in a phone call and not charge you anything. Just call, get your questions answered, and I'm happy to provide you any information you need about it.
That's great. Thank you so much. I
you're welcome.
Really appreciate your time here today. And I will let you go. And thanks very much. Have a great holiday.
Same to you. Happy holidays to everyone.
Take care. Thank you so much for being here. I hope you got a lot out of that. I know I certainly did. There's a whole lot to those reverse mortgages that I didn't understand before I started talking to Russell. And I think that they can definitely help a lot of people. So go ahead, avail yourself of his generosity if it's something that you think might apply to you. And I just want to also remind you, we are here to help you with any estate planning need you might have. AbsoluteTrustCounsel.com. You can set up an initial free consultation by going to our website and clicking the little button there. I also want to remind listeners that we have been working a lot on this whole Prop 19 issue. So if you own real estate that you think maybe you would like your children to own someday, this might be something for you to check into and see if there's some planning you should be doing right now. You can go to absolutetrustcounsel.com/Prop 19 and just read about that and see if that applies to you. All right. Thank you for being here with me. I wish you all happy holidays and stay safe. Thank you so much for listening today. I really appreciate you being here. I am so grateful that you're in my audience, and I hope you also learned something and enjoyed the show. If you like our podcast, be sure to go to iTunes and subscribe. You just type the words Absolute Trust Talk in the search bar on your podcast button on your phone, and our podcast will come up and you'll be able to subscribe there. That subscription helps us with our visibility online,
our SEO and all those kinds of things that I never understand, but I'm told that it's important. So in addition to searching for us on iTunes on your phone, you can also just go to our website and you'll find our podcast there. You'll also find all of our previous episodes. So you go to absolutetrustcounsel.com, click on the podcast tab on our homepage, and you'll see all the topic for all of our previous guests, and you just click on the one you want to listen to. Also, make sure to catch our next episode, which will be out in a month or so after this one, and I know you'll get a lot out of that one too. So I look forward to connecting with you next time.
Thank you for listening to Absolute Trust Talk. If you loved this episode, head on over to iTunes to subscribe and leave us a review. Don't forget to visit our website, absolutetrustcounsel.com, where you can find a host of guidebooks and other tools to help you through the estate planning and estate administration process. If you need help securing your own legacy, then put your absolute trust in us. Give us a call at 925-943-2740 or email us at info@absolutetrustcounsel.com to set up your free consultation today.
This podcast is not meant to take the place of legal advice from an attorney and does not create an attorney-client relationship. If you do have a legal question or issue, please consult with an attorney.